Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're assessing regional banks and financials, discussing what is likely to come, what's been pushing the S&P 500 higher, and are we going to continue this strong trend in financials? So jumping into the daily chart of regional banks here, and I do have a few other data points I want to discuss, but regional banks are very, very interesting. Why do I say that? Well, just looking at things from a technical standpoint, eliminating all the fundamental noise, eliminating pretty much anything that the media is telling you, looking at the charts. What do we see here? Well, we see that we have a pivot high, lower high, and a potential failed breakout. This is important. Why is it important? Because we were set to actually get a higher daily close with a confirmed candle, and it failed and rejected. Now you can see it's actually falling below this key breakout trend line. So that's a big thing for the markets, and that's something that we actually need to pay close attention to when we're looking and investing and trading in these markets. Because when we look at things, S&P 500 still at pretty much the all-time highs, and then you look at XLF, also still pretty much at the all-time highs. But the thing about it is one sector, the strongest sector over the last several weeks, has been the financials. They've gone through a little bit of a consolidation period. Some staple sectors, other sectors have taken leadership, but financials, after this low pivot down here in August, had a monumental push to the upside, and they're one of the big reasons that the S&P 500 pushed higher here. And when I see financials closing down 0.48%, say regional banks down 1.46%, there was a lot of red. Bank of America down, Wells Fargo down, Goldman Sachs down, TD, so a lot of the Canadian banks. Then you had DFS, PNC, a couple of regionals. So Schwab, MTB, WAL, there's a lot of banks that closed negative today, and the regional banks are what's concerning. The regional banks are really giving me signs that, okay, we could actually be going through a bit of a drawdown. Now, let's isolate some of the support levels. Well, you can clearly see that these two trend lines, this is a wedge pattern. It looked to be a bullish wedge pattern breakout over here, but it was met with a high volume, 2-day high volume sell-off and rejection. The fact of the matter that this is failing here now leads me to think that we're going to test the lower boundary wedge. And if you lose that lower boundary wedge pattern, there's a lot of downside that could commence into this market, and I just want you to pay close attention to that. Now, when we look about it from a fundamental standpoint, obviously we've had the Federal Reserve cut rates finally giving us a big 50 basis point cut. And the question is, aren't banks supposed to be doing well when interest rates are set to go lower? Well, the logical thing would be yes, but markets don't move logically, right? They're always forward looking. A lot of people knew the Fed was going to cut. Why? Because the bond market was telling us that, and they forward price things in. That's why I think this rate cut is actually going to be a buy the rumor, sell the news type of event, and that's something that we all need to be very, very careful about. So again, when we look at things, regional banks right now are going through a bit of a failed potential breakout. You also look at an important sector, biotech. Look at this failed breakout, a new peekaboo high met with a high volume rejection and sell-off. That is not a good sign for really the indice that is affected by regional banks and biotechs is what? Your IWM. So pay close attention to that. I'm just going to use the TNA as a cleaner chart because this is a sector, and this is an indice that is heavily weight regional banks and biotechs, and if those are going through failed breakouts, both ETFs, then that could be a big problem for small caps. So again, I think small caps were strong going into this rate cut because that's what the market participants were pricing in. They were getting a little exuberant, a little bit optimistic that, you know what, if interest rates are going lower, cost of capital is going to be cheaper, these companies are finally going to be able to strengthen up their balance sheet. But the problem is, why are interest rates going lower? Why did Powell do a big 50 cut instead of a 25? There's a lot of concern around potentially the labor market overdoing it. So we're just going to have to see over the next couple months what truly transpires here. But I'm paying close attention to financials because they were such a strong sector. And taking it one step further, take a look at this U.S. 10-year yield. I mean, since the rate cut, really the U.S. 10-year yield has been pushing higher and higher and higher. And that is something that should be very, very concerning. Now, one more step further, one thing, a really, really gold nugget here. If we do the U.S. 10-year yield minus the U.S. 2-year yield, take a look at this yield curve inversion. I mean, we have been trading in a zone that has been deeply inverted. I'm actually going to go to the weekly chart just to show you this. We have been trading in a zone that has been deeply, deeply negative. And this is the negative. This blue zone here is the negative. This yellow level is the inversion when the yield curve was inverted. This is the 10-year yield minus the 2-year yield, which gives us the spread between two of the bonds. Sorry, between two of the yields. And right now, the yield curve just has flipped positive over the last couple weeks and is starting to potentially make a parabolic move. I've showed my members and discussed this in depth. I'm just going to quickly identify. The last time that the yield curve was inverted was basically here in 2006, 2007. Then we all know what came in 2008. The GFC, which, believe it or not, my family was personally affected by. My dad's sector collapsed. The automotive sector collapsed. His company went under, went from 6 figures to nothing. We lost our home. So I've studied this in depth. Then you go to the dot-com bubble. 2000 was the next time the yield curve inverted, and we all know what happened then. And then in the 90s, the yield curve was inverted, and you know what happened then. So all I'm saying is there's not many times the yield curve has been inverted, and this has been the longest inversion in history. The longest inversion in history. Oh my goodness. What does that mean? That likely means that there's probably going to be a horrendous amount of disinflationary pressures through unemployment spiking, through gross domestic products coming down. Overall, a potential global recession is set to occur over the next maybe 6 to 24 months. The timing is difficult, but this is a 100% success signal, and it's something that you definitely have to pay close attention to. Now, if we go into the structural technical move of this yield curve uninverting, look how the rise happened so ferociously and so quickly. I mean, to trade this from a technical standpoint, I mean, take a look at these moves, right? Huge, huge moves in the yield curve spreads, and it happens very, very quickly, which means that it's a snowball effect kind of theory. Once the economy starts to actually trend down and unemployment trends up, it's a negative feedback loop, and it's that old snowball theory where you take a snowball at the top of a hill, roll it down the hill, and it just keeps getting bigger and bigger and bigger and bigger, and more snow accumulates. So it's the same sort of theory, right? Once the economy starts to really, really get depressed and in a bad state, it's hard to get out of that unless we start stimulating and easing. And let's just face it, I mean, are we going to print bazookas like we did like COVID? Maybe, maybe not. Time will tell. But certainly there should be a disinflationary trend that pushes bonds higher, pushes interest rates down, pushes stocks down, and we'll see what happens here. But watch those financials, I'm telling you. If you found this video useful and helpful, please give it a like down below, and we'll see you on the charts a little bit later.